Well, hello everyone. I'm excited for this week's video. I have a special guest with me, and I'm going to try to do more of these moving forward, interviewing some experts in the field. Today I have with me Joe Mata from Nexa Mortgage. I've actually known Joe since I became a realtor 8 years ago. He's actually the very first lender I ever met. Mm-hmm. Back then he was called Geneva Joe. Mm-hmm. And I
a lot of nicknames.
Yeah, and I was with another real estate brokerage at the time, just starting out. And so my introduction to mortgages actually came from Joe. And we've reconnected through our core networking group and through Winter Haven Youth Soccer Association. I coach, many of you know, I coach my son's soccer team, but Joe actually coaches a team out there, and he doesn't even have any kids playing soccer anymore. He's just coaching because he enjoys coaching and enjoys helping the kids. So
that's true.
We've reconnected a lot lately, and so it's my pleasure to have Joe here. So I'm going to have him introduce himself, and then we're going to talk a little bit about a loan product that a lot of people don't know about, the FHA 203H loan, because given what we've just had happen here in Polk County with Hurricane Milton, it's a loan product that may help some of you out there. So, Joe, why don't you tell us a little bit about your background in the mortgage industry?
Hey, Chris, thanks for having me here. Happy to be here. I just want to share a little bit about me. I was born in New York City and moved down to Hialeah, South Florida, and grew up there. We moved up to Polk County in 2012. I'm married to my wonderful wife since 1995. I'm actually originally, my family's from Ecuador and her family's from Honduras. We have 3 wonderful adult children and a couple of fur babies. As Chris mentioned, I have been in the business for a while. I've been in it since 2004, helping families since then, and really excited to talk about a special program today, FHA 203H.
Okay. Well, tell us a little about what is the FHA 203H loan product all about?
Yeah. Well, it's something specifically we're highlighting now because obviously Chris said we have a lot of the hurricanes who ran through here, but it is specifically for victims of those hurricanes and natural disasters. You know, us lenders love acronyms, and it's one of the things that is specifically for an area or a zone that has been a presidentially declared major disaster area, so PDMDA. But just basically know that it has to do where if your home or your home was in a zone that was in one of those areas, and that could include, of course, tornadoes and even the floods that came about from the hurricanes. Those are going to be covered in there. So the house has to be in an area, it has to be unlivable as well, and it has a couple really cool features, which is it also allows for a renter who was in that home as well to qualify for this loan. And a couple other super important benefits is that it allows for 0% down. So as you know, FHA allows for up to 6% seller concessions, which means that you can get the seller to help you with closing costs. Mix that with a 0% down. Somebody in this predicament could actually be able to get into a home for almost little to no money down.
Okay. So basically, people who are eligible, they have to be in this natural disaster area, federally declared natural disaster area, and their home has to be uninhabitable, unlivable.
Correct.
Otherwise, if they meet those requirements, they would otherwise be eligible, and it's a zero down loan option. Mm-hmm. Is it just people who own a home, or what about renters? Are they eligible?
Yeah, the cool thing about this is the renters are also eligible, and so you don't have to be a homeowner to qualify for this. Now, we still have to go through the same qualification process as an FHA standard loan, but it does allow for renters.
Okay. And what are some of those standard requirements for an FHA loan?
FHA is a little bit more lenient, which is why it's real popular for first-time home buyers. But in this case, if you're already a homeowner, or like we said, the renters, one of the things apart from the zero down is actually allows for the homeowners who are in the house to qualify even if their mortgage payments were late. FHA actually does allow for late mortgage payments. That's, again, why it's really popular for the first-time home buyers. But in this particular situation, if because of the hurricane, and understandably, we have some financial situations going on due to that, you can qualify even if you have some mortgage lates, as long as you didn't have any more than 3 before the hurricane or the disaster or declaration.
Okay. Are there minimum credit requirements for an FHA loan?
Yeah, we can go down to 580. That's the way we work.
Okay. most people think that you've got to have a super high credit score in order to qualify for a mortgage. So I think it's important to share.
Absolutely. That's right. So we actually, so a little bit about me, kind of rewind. He did mention I'm with Nexa Mortgage. We're the largest mortgage brokerage company in the nation. So, but for this specific program, you do got to go down to 580. But if we're outside of that, we can go down to 500, depending on the situation with down payment and everything.
Okay. Are there specific property requirements for the FHA 203H loan?
Yeah, actually, so we did talk about a couple of the things for the buyer, the borrower to qualify, which is, again, standard FHA guidelines. But the property does need to be a single family residence. It does need to be, obviously we mentioned needs to be in that area. Also has to be a single family. It could be a PUD, which is inside of what we know as a HOA community, or outside. And it could be, it's just not going to be, it has to be detached. It can't be attached.
Okay. So no condos or villas or townhouses.
Correct. Because those are usually covered with different policies, different insurance companies.
What documentation is needed, and is there any flexibility given the impact of the natural disaster in terms of some people may have had their documentation float away in the flood?
Yeah.
You know, are there some flexibility in getting that?
Yeah, that's a good point. Obviously, there's a lot of stuff, a lot of loss during these type of situations, not only with the home and memories and stuff like that, but when it's time to do important things like getting a new home or a new home loan. Luckily, in our world, a lot of the lenders, all of us have the same ability and different third-party resources to access employment verification, of course, IRS documentation. So luckily, we're in the digital era, so we can cover most of that with the different products that are out there or features that are out there.
Okay. And what kind of documentation can people expect to need to provide to qualify, whether it's FHA or FHA 203H?
Well, I usually say there's usually three main things. We got to basically come up with some income documentation, so like pay stubs, W-2s, or if you're self-employed, your tax returns. You're going to need possibly some bank statements. Possibly, if we're going to go with this particular loan, you may not need too much because you're not dealing with a down payment. But if you need to pay for closing costs, then you do need to show some bank statements. That's really why we ask for bank statements. Something that's a little bit outside of the norm in this particular product was you would need to be working with your service provider, letting them know what happened. You're going to be working with your insurance company, obviously, to make sure that they're taking care of what they need to take care of. One of the things that is important to know is that to qualify for this new loan that they're going to be doing, this loan allows something where we can also omit the current mortgage payment, which is important. Or you do have to be working with your service provider, your current loan service provider, as well as your insurance, so that they know. But if you are working with them and we can document that, so that's obviously another documentation that we might need, you can omit that payment. As you know, you won't want to have to qualify for two mortgages, you just got to qualify for the first. So that's another feature as well.
That's a really huge deal, because one of the things I know lenders look at is the debt to income ratio.
Correct.
And so if you're counting the first mortgage in your debt to income ratio, most people aren't going to qualify for this new mortgage. So the ability to not include that first mortgage, as long as you're working with your service provider, that's huge.
Yes, it is.
Is there a time limit to apply for the FHA 203H loan?
Yes, it's going to be 1 year from the time that they declare the disaster. So you don't have to apply immediately, but you do have a year, and sometimes they can extend that period of time. You've just got to look at the HUD website to see how long the time is.
Okay, great.